the network is somehow not nice. I think we are connected right now. Okay, we are connected. Are we connected right now? Are we connected? Please let's quickly check this if we are connected. So let me just check this if I'm connected on the live stream on YouTube. So guys, okay, gold, we want gold, okay, gold, GBP USD, gold, GBP USD and gold, right? And GBP paired against the Japanese yen, right? GBP paired against the Japanese yen, right? Okay, we are live on YouTube, so you guys now can watch us on YouTube. So let's get back to analysis. So based on what we have on GBP paired against the USD, currently I can't see any reason to short or to long GBP paired against the USD. Why? Because the market is in a state of confusion. The market is in a state of confusion. So whenever the market is in a state of confusion, I see no reason why you should be looking out to long or to short, right? So currently right here, the market is not giving off a specific technical reason for us to long or to short. So if you are trying to long or short right here, you are just trading with the crowd. This is the crowd movement. The crowd are moving prices right here. The crowd are just moving prices right here, right? So let's see what we're gonna have right here. Maybe it's gonna be a descending triangular formation for a downtrend breakout, or maybe price is gonna break to the upside. If we can see a breakout to the upside, we need to see a validation before we can go long right here, right? Alternatively, if price can give us a descending triangular formation whereby we have price giving us a descending and then price breaking out, then it means price is giving us a reason that yes, there's a more downtrend on GBP paired against the USD. So not until price can break below this low structure right here, I see no reason why you should be looking for short entry. If price can break above this upper band of this falling channel, I see no reason why you should be looking for a long entry. So if you want to short, you should only be looking for short when price closes below this support. If you want to long, you should only be looking for long when price break out right here. So any of these two decisions right here, breakout or down. So for as long price can't do any of these two, then you shouldn't be looking out for any trade at this medium, right? So that's what I have on GBP paired against the USD. So let's check. A lot of people want analysis on gold. All right, a lot of people want analysis on gold. Okay. Next on the list is JPY. That is yes, British pound sterling paired against the Japanese yen. So let's check GBP paired against the Japanese yen. Let's check the monthly chart. Wow, the monthly chart is definitely reversing upward in a strong rejection. Wow. This is powerful. This is powerful. So let's check it. Currently, what we have on GBP paired against the JPY right here, we are still having price in a ranging medium. Can see that? So if you ask me, we still have price going on within this head and shoulder chart pattern. So this head and shoulder chart pattern, it's not yet confirmed, but we can still refer to it as a potential head and shoulder chart pattern, because what we have on this price chart right here, it looks like an upright head and shoulder, not until price can close above the head right here, because most times we can have a head and shoulder that has a rising shoulder, a rising right shoulder, right? So we are still monitoring this asset based on the higher time frame. Based on the higher time frame, the 4-hour chart, we have a strong bull bar. I gave analysis on this currency pairs at noon today, and I stated for those who want to short, I think it's not right, it's not advisable to short. I said based on the long bullish momentum we have on the price of this asset. You know, if you attended the live stream I held around 12 p.m. today, I gave analysis on GBP yen, and I stated based on the strong bullish momentum right here, there is tendency for price to continue its bullish uptrend. So for those who want to short at resistance right here, it is risky based on the momentum analysis I gave right, based on the strong momentum, strong buy sentiment, strong buy momentum on this price chart, right? So this is why I stated I don't think it's nice to chart right there. You can see the bull trend still continue upward. So based on what we have on GBPY, the bull trend still continue upward. The bull trend is still continuing upward. So let's see how far it can go. Let's see how far it can go, right? So currently I have no open position and I have no interest in trading this currency pairs because I already have a plan. So I'm looking out for my plan. If my plan doesn't work out, then I will just divert my attention to other currency pairs, right? I will divert my attention to other currency pairs. So this is my view on JPY. So based on JPY, the strong bullish buy entry we have right there still support a bullish sentiment. So if you have a long entry right on GBPY, technically you are trading in favor of the bullish momentum, which is technically still okay because you are trading in direction of the strong bull momentum. But if you are looking for a short entry right here, it's so risky, it's very risky, right? So that is based on my view on JPY. Let's check gold. Let's check gold. Let's check gold on the day chart. So based on what we have on gold is trying to play a potential bullish trap. For those who want a long eye right there, there's a potential bullish trap on gold. So let's see what we're gonna have on the close of price this week. Let's see what we're gonna have on close of price this week. We have a break of the channel. We have a break of the channel on the 4-hour chart. So what we have right here is a short entry for day trading. So for those who want to day trade gold, if you want to short gold, you should be very careful because you are trading a counter trend trade against the bullish swing on the 4-hour chart. So it's advisable you go in with a small position size. Then you start increasing your position size when the trade keeps on going in the direction of your anticipation, right? So if you are looking for a short entry on gold, I think you need to go in with a small position size. But based on what I can see on gold, I like a kind of market that can give me a change of market structure. Because if you ask me right there on this trend right there, this trend is still in a bullish structure. This still is bullish structure. Can see that? And I'm gonna give you a reason why I think this is still in a bullish structure. So first, this is a this is a lower low right here. This is a lower low right here. This structure right here we can target as a high low, and right here we can target as a high low. Right here we can target as a high low. So right here is still a high low, right? So if you are trying to short right here based on the aggressive short entry, you have to go in with a small position size because the bullish market structure on gold is still active. So you have to be very careful if you want to short right here. If you want to short right here, take note there's a potential key level structure which acts at the price of the 1,947, which could serve as a support for price. So if I were you who wants to trade gold, this is what I'll be looking out for. I'll only be looking out to see how price will react to this last higher low structure right there. If we can see a breakdown of price and then price give us a new low high swing, then that is when I'll be looking out for entry. So I'll only be looking out for short entry on gold if I can see a new formation of a lower high swings. So what are the characteristics of a bearish swing? If you want to go bearish on gold, what are the characteristics of a bearish swing? If you are looking for a bearish interest or shorting opportunity on gold, what are the characteristics of a bearish swing? For a bearish swing, we need to have something like this. If you have a bullish rally like this, for you to go short, you need to have something that is gonna look like this, right? So at this medium right here is where we can say, okay, there's a change of market structure because this is a bullish structure right here. And then once we have a low high swing, coming down and then retesting the previous higher low swing and then now serving as resistance. That is when we can say, okay, we have a change of market structure. So based on gold, if you ask me where should we look out for change of market structure on the price of gold, this is what I'm going to be looking out for on the price of gold. I want to see price closing down and then retesting. Let's get this off. So based on the day trading strategy, I want to see price closing all the way down and then retesting this higher low swing right here as a new resistance structure before I can be looking for charts. So this is where I'll be looking out for charts. This is where I'll be looking out for chart. When price makes a pullback down, then I will be looking out for chart entry at this medium and then having my stop loss above a low high swing for a more downtrend. And if you can have this right here, we still have a minimum of 2 risk to reward ratio. So this is how I approach trade in the market. Before I trade in the market, I'll always look out for more convictions. The more convictions I can see supporting my trading decision, then yes, I know right, I can get into that trade. So for now, this is an aggressive trade entry, which I'm not interested to get into it currently right now. So this is what I have on gold. So for those of you who want to short gold, well, good luck to you guys. But personally, I am not interested to do that. And as well, I want to see the end of close of this month. As you can see, the month of October is giving us a bullish engulfing bar on the monthly chart. So if we have a strong bullish engulfing bar on the monthly chart and you are looking to chart on the lower time frame, that means you are definitely looking for a retracement of the bullish engulfing bar. So I would rather like to see price to be trading in direction of the higher time frame. Based on the higher time frame, we have a bullish engulfing bar. The bullish engulfing bar right here is obvious. It's obvious right here. So based on the weekly chart, this is what we have. On the weekly chart, price is still bullish, and then I can't yet see price at a strong key level structure. So this is one of the reasons I don't want to get into any trade on gold for now, right? So I always look out for take trade opportunity at a powerful key level structures in the market, right? So the level right here to me is a minor key level structure. This is a minor key level structure, right? This is a minor key level structure. So if you're looking out for trade opportunity right here, good luck. But based on my own trading strategy, I am not looking out for sell or short entry yet on gold, right? I want to see change of market structure before I can make this decision to go short or maybe to just stay out of this asset and then look for asset that is easy and gives me more technical reason for me to trade it. All right, so currently right now price is still trading above key level structures on the price of gold. So let's see if price can break down, give us a retest. So based on the 4-hour chart, if price can break down, price can make a breakdown all the way down and then retest this key level structure as a low high swing, then fine, with a strong technical signal, then I think you can look out for a short entry with a small entry right there. The market goes down, keeps on validating new structure in the market, then you keep on adding to your short entry. So that is the best way to approach gold. So if you are trying to jump in right here now, well, you are taking aggressive entry. Imagine those people who short right here last week, who stated this is a double top. You know, I remember the analysis then, I remember the live stream. A lot of traders were saying this is a double top, this is a double top, and I stated, well, if this is a double top and you want to trade it, good luck. As you can see, the trade cut out a lot of traders and then went up again. So it's not just about looking out for buy or sell signal. It's all about building probabilities. Trading is about building probabilities. It's about building probabilities. Okay, so for now I can't see any strong probability signal that is gonna break down. I have to see a switch of market structure. If I can't see a switch of market structure, then I see no reason to look out for any short entry. So based on what we have right here on gold, in a past historical history, in a past record, we can see we have a high right here, we have another high right here, which is a double top, we have the neckline right here. After price broke the neckline right here, price still went to test this neckline as a validation structure, which we have it as a validation of the neckline. So these are the type of entry zones I like to short. These are the type of zones I look out to short, right? And then again, let me give you another example right here. after price tested this level once again, price still went up to test. Price still went up the second time again to test once again. So these are the type of structure I want to look out for. I want to look out for validation. I don't just want to make the first entry, the first bearish breakout, the first bullish breakout. I don't do that. I only take the first breakout when the breakout is supporting the direction of the trend. For example, if we are in a downtrend and then I have the first bearish breakout, then I can take the first bearish breakout. But if we are in an uptrend, and then I have this first bearish breakout, I won't take the first bearish breakout because the first bearish breakout could be a bearish trap. So I want to see validation that yes, this bearish breakout is legit, it's real, it's not fake. So therefore, based on what we have on gold, you can see we have this bull run, bull movement. So if you are taking the first breakout right here, it's risky. I want to see a change of market structure before I can go down. So that's my view on the gold. So let's try to apply our trend line right from this structure. Let's try to fire it all the way down and see how price is reacting. So try to connect a trend line structure all the way up from the day chart. So this is what I have. So, and then most of you guys, whenever you see a break of trend line, you rush to take your trade. You know, trend line is majorly good for riding trend, and that is why it is called trend line. I don't know, maybe you guys understand this. Why is trend line called a trend line? Why is a trend line called a trend line? Let me ask the question on the screen. Why is a trend line? Why is a trend, let me use a capital letter. Why is a trend line called a trend line? I need to ask you guys this question because most time traders use trend line the wrong way. Traders use trend line the wrong way. Why is trend line called a trend line? So I need you guys to give answer to that question. So I want answers in the comment section. So I want everyone to participate in the live stream today. So this is a question for all traders in the live stream. If you are right there on YouTube, on TikTok, please give answer, comment, leave your comment. Why is a trend line called a trend line? Why is a trend line called a trend line? Please give answers. Why is a trend line called a trend line? All right. Why is a trend line called a trend line? I need to know. No, I want answers from you guys. Why is a trend line called a trend line? Why is a trend line called a trend line? Why is a trend line called a trend line? I know there are a lot of traders in the live stream today, so I want answers. Someone said, because it shows direction of the trend. Yeah, that is great. Trend line shows direction of the market. Yes, you are right. Visuals, you are right. Raphael, you are right. I want more answers from YouTube, more answers from TikTok. Why is a trend line called a trend line? Why is a trend line called a trend line? Please, I want more answers. I've gotten a lot of answers from a lot of intelligent, smart traders right there. Thank you so much. Please, why is a trend line called a trend line? Right? So a trend line is called a trend line because it tends to measure the direction of the market trend. So that is why it is called a trend line. So when a tool is used to measure the direction of a trend line, so why do you want to use it to trade against that direction of the market? So that is the question. If a trend line is majorly used to measure the direction of a market trend, so why do you want to use it to trade against the direction of the trend? So that is the question. Why should you use trend line to trade against the trend? Now let me ask this question once again. Right? So this is the first question right here. Now let's ask the second question. Question 2. Why use trend line to trade against the trend? Right? So this is the second question right here. So this is the question right here. So if you guys can understand these two questions right very well, this will help you to avoid using trend line the wrong way. This will, someone said, because it's the line which shows direction of move of market. Yes, you are right. Milk FS, you are right. And someone said again right, I said because it shows the direction of the current market. Yes, my Chinese friend, you are right. Someone also says shows where the market is constant. All right. So trend line shows the direction of the market. Yes, you are right. So now the question is, why use trend line to trade against the trend. So if a technical tool is used to measure the direction of a trend, then it shows you that you should only be looking out for a test of trend line in the direction of the market trend. So if you are trying to use a trend line to trade against the direction of the trend, then you must have a lot of technical factors before you can do that. Please listen again attentively. If you want to use a trend line to trade against the trend, if you want to do against the trend with trend line, then don't focus your decision majorly on trend line. You have to combine a lot of other factors before you can trade against the trend with a trend line. So this is what most amateur trader does, inexperienced trader do. Where they see a first breakout of a trend line, they start trading against the trend, which is technically wrong. This is wrong. So before you can use a trend line to trade against the trend, you must be able to combine a lot of confluence factors. The more confluence factors you can find supporting the break of that trend line, then you know, okay, this trade has a higher probability ratio to go, or possibility ratio to go in the direction of my move. Right? So this is how you can use trend line to trade against the trend. So, and as a beginner, one of the easiest and simplest, one of the simplest ways for you to make money is only trade trend line in the direction of the trend. Use trend line to trade in direction of the trend. Whenever you see a trend line is being broken, stop, don't trade it. Just watch out to see how the market goes and record your observation. So not all the time you have to trade as a trader. There are some days you have to just learn what the market has to play. There are some days you have to just listen to the market, watch the market and see how the market operates. Okay? Not every day you trade. There are some days you just have to learn what the market is saying. The market is always talking to us. The market is communicating to us. But a lot of traders, they don't want to listen. A lot of traders, they don't care what the market is saying. So learn to know how to listen to the market. Right? So first right here, this is a break of trend line. Technically, trend line should be used to follow the trend. So if you want to take a trade because the trend line has been broken, then it means you are going against the methodology of a trend line. So if you are going against the ideology of a trend line, then you need to have a lot of confluence factors. So what are these confluence factors you should look out for when you want to use a trend line to trade against a trend? This is based on like your break of market structure. You see there's a change. There's a change. So in a bullish rally, let's try to make another drawings right here. So if this is a bullish rally right here, okay, first let's connect our trend line. So this is a trend line right here, right? I have a trend line on this price chart right here, and I want to trade against this trend line. I want to trade against this trend line. So if the market should move, okay, let me just use a very bold line so that you guys can see the trend line very well. So, okay, right here is a trend line. If I want to trade against this trend line right here, there is a bullish trend line, right? If I want to trade against this trend line right here, as the market is moving up, I'm looking to buy at the test of this trend line. I'm moving to buy. So when the market break right here, don't jump into short right here. Don't do this. If you try to short right here, it is wrong. This is wrong. It is wrong. This is wrong. Don't do that. It is wrong, right? If you do this, most of the time you will lose your money. Most of the time you will lose your money. You will blow up your account, and you always blow up your account because you are using the trend line the wrong way. You are using the trend line the wrong way. So this is how you use the trend line. First, when the trend line is being broken, that doesn't make a trend line has been confirmed. That doesn't mean the market has been confirmed that you can trade against the trend line. Right? So let's get this off right here. So once you see a trend line has been broken, what you need to do is you need to see a change of market structure, a switch of market structure. So there are different type of entry levels, entry zones in the market. So first right here, when you make an entry right here, is called an aggressive entry. In fact, I don't call this an aggressive entry. I see this as an unwise decision. When you make entries based on the first break of a trend line, it's an unwise decision. The only time you can take the first breakout of a trend line is only when the break is in direction of the strong momentum in the market. This is another topic for another day, right? But first, let's stick to the basic understanding of how you can use a trend line as a beginner in the market. So right here, once we have the first breakout right here, let me just mark this level right here as point A. This should be point B. This should be point C. So at point D, I'm going to put this up. So this is point D, right? So when the price breaks at point D, you have to look out for price to make a pullback. So this could be a pullback to this trend line right here, and then you have a rejection downward. So once you have a rejection downward, you know, okay, this is the first technical signal right here, which you can call as hash factor number 1. So right here, you have the first factor right here. Let's get this. So right here, you have the first factor right here. And first, you still need to exercise patience because this is the first factor. If you try to make an entry right here at hash factor number 1, that is what we call an aggressive entry. An aggressive entry. So as an aggressive trader, you have to go in small. You have to go in with a small position size. This is where you manage your risk. If, for example, if you are looking to take a 1 standard lot on this sell trade right here, based on aggressive entry, you can divide your normal position size into 4 places. That means you can take like 0.25 because you are still not yet the direction the market is going to go to. So at this medium right here, if you want to take an aggressive entry as at this factor number 1 right here, let's try this again. This is aggressive entry. So what we have right here is what we call the aggressive entry. So making this short entry at hash factor number 1 right here is an aggressive entry. And making a sell entry at this medium right here, okay, I'm gonna use this arrow. So making a sell entry at the first breakout of point D right here is an unwise entry. So let's tag this right here as unwise. It's unwise. It's something unwise. Shouldn't do that. Unwise, right? Technically not okay, right? Technically not okay. So this is the point D. If you make the first entry right here, it's technically not okay, right? So now let's see how the market goes. So once the market goes down right here, this is the last higher low structure right here. So we need the market to prove that yes, the higher low structure has been breached. Once the market goes down right here and then makes a pullback to this level structure right here, then we know yes, we have a change of market structure. So once we have a pullback right here, then we tag this zone right here as hash factor number 2 right here. So right here, we tag it as conservative entry, right? We tag this zone right here as conservative entry. Conservative entry, right? So this is how you guys know. Can see, right? Okay, I'm gonna get this to be 24. Okay, so right here is conservative entry. So once you make an entry right here, is conservative entry. So some traders might decide, okay, I still want more conviction that this price is definitely gonna come, is turning to a downtrend. While some traders will prefer to make an entry when the market keeps on going down and then coming down again to pull down. Why at this point right here, we call this point right here the hash number 3 right here is what we call the extra conservative entry right here. So let's tag this zone right once again. So this is what we call the extra conservative entry right here, right? So right here we can make this to be 20, right? Okay, so this is what we call right here. So this is how you make entries on trend line. This is how you make entries on trend line, right? So I'm gonna put our trend line right here. Let's put our trend line right here. Okay, let's make this trend line to be bold. Let's make it to be bold, right? So right here you can see how we make entry based on trend line breakout. So this is how you trade. So when you make your first entry at the point D, it's unwise, technically not okay, technically not okay. So when you make your first entry at the aggressive entry, you reduce your position size. For example, if you have a $1,000 trading account, if you have a $1,000 trading account and you want to risk like let me get this off, and then you want to make like as a rule of thumb, you don't risk more than 1%, and you want to risk 1% on your trading account. So let me just get it properly, and you want to risk 1% on your trading account. So at this entry right here, so at this first entry right here, you can just risk, if you are risking 1% of your trading account, that is $1,000. So you could just make an entry of like $200 right here. Can make $200 right here. So when your trend comes to this level again, you can add to your position $200 right here. As the market keeps on coming down, you keep on adding to your position right here. Alternatively, you can decide that, okay, if you want to make an entry right here, you could decide to make the first entry right here because this is very aggressive. So if this is aggressive, you can make an entry of 100 right here, and then at this medium right here, you make a 200 right here. And as the market keeps on going downward and you see that the trend is now confirmed, then you can keep on scaling up to your entry right here, whereby you keep on trailing your profit or down. That means you risk all the total account right here, you scale everything up to 300. So this is how you increase your position downward. So I see a situation whereby traders want to make the first entry based at this aggressive entry, and they risk all total. They risk all total. So what happens if the market reverses up and they'll continue its trend? So you get wiped out. So this is all about risk management, money management in trading, right? So I hope you guys were able to get some meaningful things in this live stream today. So someone said, because the line, okay, someone said, evening boss, what is your setup for this week? I'm gonna make a list of setup for this week or this evening before this night comes to an end. I will make a list, but currently I have the GBP USD and Euro USD on my list, and the reason why I have GBP and Euro USD on my list is because what I can see on the monthly chart. On the monthly chart candlestick, we are having a doji candlestick, and on Euro USD doji candlestick, on GBP USD doji candlestick. So whenever you have a doji candlestick at a key level structure, especially at a major key level structure, it has a lot of strong technical implications. It means over the past month, the market was unable to go up and go down. So there's a state of indecision in the market. So next week or next month, there's a higher tendency for the other side of the market to come in and exercise their interest. So please, can you check USD Canada? Okay, I will go through USD Canada. Where will the entry start? I already gave analysis on the entry right there. USD Yen. So let's go through the USD Canada for the first person who asks in this live stream. So let's go to the USD Canada. First person who asks in this live stream. So someone said, what is my setup, or is it not setup list? So let me mark the key level structure on this gold before we move to the next analysis, so that should the case I want to give analysis next time. So this is how you guys mark key levels on the trading chart. You can see it's so easy, not difficult. No, that is how I mark my key level structures. For those of you asking how do I mark key level structures on the chart, this is how I mark my key level structures, and I go to the lower time frame and see where I can align the level and then what I can modify. So this is how I mark my key level structures on the chart. So can see that. So I have successfully marked my key level structures on the chart of gold. As well, you can have another key level structure right here. You can have one right here, but I prefer to make this level right here a minor structure. So I'm going to make it to be black color, and then you can tag your key level structure at this level right here, whereby you are treating this level as a first breakout. So I would like to have my key level structure right here and tag this zone right here as a first bearish breakout, right? So this is how I mark key level structures on the chart. So this is my key level on the chart of gold. Now this chart is nice now for me to trade. As well, I have a key level structure right here I can mark. So I mark this right there. This is a major key level structure because it has never been broken in the past. So I have to change the color to red. So I change it to red, My major key levels are red, while my minor key level structures are black. So this is how I mark my key level structures in the market. So lastly, I have a low swing right here, which I can as well mark as a major key level structure. Now I move to the higher time frame to see how this key level structure aligns to the chart. You can see how they align to the chart. So right now I know, okay, these are the key level structure I need to be watching out for on this asset. You can see that. So this is what I have on this asset right here, and then based on the day chart, this is what I have. So this is how I mark my key level structures on my price chart. Now let's move to the chart of the USD Canada. Based on USD Canada right here, let's go to the USD Canada right here. So if you are watching from my TikTok account or from my YouTube channel, please make sure you follow my profile, subscribe to the channel, follow my profile, follow this profile if you want more trading educational content, free content. Follow this profile, right? And then make sure you like my videos. Don't like more than 2 videos. So after this live stream, or as you are watching this live stream right now, you can add to my videos, you can like my videos, but don't like more than 2 videos. All right, don't like more than 2 videos. Thank you. So as well, you can use the description on this whiteboard right here. I have a description on this whiteboard right here, so you can, if you want to learn more about trading, follow this information right here to join my Telegram group. So on my link on my bio, click on the link on my bio, and then on the newly open page, select Trading Setup Telegram to get access to my Telegram group. This is where I share free trading educational content, trading setup ideas in the market. You can as well discuss with other experienced traders in the Telegram group. So this is a community whereby you can communicate and discuss, ask questions, support, guidance, and then share your trading experience in the Telegram group. So it's a community for traders, right? Thank you. So now we are on the USD Canada. I gave analysis here as well. That was some hours ago, 12 p.m. and I stated my view on Canada, and I stated prices at resistance structure. So currently, base we have on this level right here, I am not comfortable to long into resistance structure. So this is what I stated. So let's quickly construct our key level structures on this price chart. So based from the monthly chart, I have the key level structure right here, and then again I have a key level structure right here. I have another key level structure right here. I have a series of a rejection structure right here. So let's move now. I have another key level structure I can construct based on what I have right here. So now let's move to the weekly chart and see how this key level aligns to the chart. So this is how I mark my key level structures on the chart. So right here I have a key level structure, and right here I have a key level structure right here. Let's fit it properly. And I have a series of key level structure right here, and low at this zone I have a key level structure right here. So now I have my key level structures on this price chart. You can see, let's extend this key level structure to the left side right here to catch the low of price right here. So now based on the weekly chart, my key level structure is ready. Now let's go to the day chart and see what we have on the day chart. On the day chart, these are my key level structures on this price chart. All right, so I have another key level structure I can mark right here, which is right from this swing high to this swing low right here. So this is how I mark my key level structures on my trading chart. So the next thing right now is to see how I can connect a trend line on this price chart. So this is how I run my top-down analysis. For those of you guys who have been asking what is top-down analysis, how do you mark key level structures in the chart? This is how you mark key level structures on your trading chart. So next I have to look out for potential support structure in the market. That is dynamic trend lines, dynamic support structure. So from the swing low right here, let's change this trend line to be 1 px. Okay, now I have this trend line upward. So based on the long-term trend, right? Okay, this is still a short-term trend. So because trend within 3 months calendar period can be tagged as a short-term trend, but this is the month of July to the present month of November 1st. So that is a July. We have July, okay, and August, September, October, November. So we can still tag this as a short term or as an intermediate trend, right? Right, we can tag it right there, right? So we have an intermediate or immediate trend. So this trend right now is now going to like 4 months. So we have an intermediate bull trend, intermediate bull trend. Now let's see what we have on the 4-hour chart, which is the intraday chart. So short-term trend are formed on the intraday chart. right? So this is what we have on the intraday chart of the USD paired against the Canadian dollar. We have price in an aggressive bullish rally, and then currently right now price is trading at a powerful key level structure. We can see this key level structure acted as a resistance for price. That was on the 10th of March 2023. When price got to this peak right there, price precipitated downward aggressively, and this price move right here resulted in a depreciation of almost, that was, if I am right here, that is almost 770. You can see that is minus 5.6% depreciation in value, right? So, and then again from this structure right here up, we have it 6% appreciation in value. So which is almost the same distance, the same appreciation range value. So at resistance structure right here now, what I need to start looking out for is there is a wide distance away from this structure right here. So I don't want to long at resistance structure. So what I'm looking out for at a resistance structure is I want to see a potential rejection of price. So if I want to be looking out for trade opportunity right here now based on what I can see on the weekly chart, I'm not going to be looking out for a long entry, because if I'm looking for a long entry right here now, I'm longing at a resistance structure. So I want to look out for a pullback. So currently right now, if I'm going to be trading right here, traders should be looking out for a counter trend setup. If you don't trade counter trend setup, which is risky and it requires a lot of experience, and then it's not recommended for beginner traders, then it's better for you to stay quiet and exercise patience, and then wait for the Canada USD paired against the Canada to make a pullback downward. But based on what I can see right here now, we have a strong bull moving trend. So I am looking out for a nice entry zone. I don't want to buy high and I don't want to sell low. So I'll be looking out for a depreciation in price level, maybe to a key level structures on the price chart, so that I can have a more technical reason and I can have the best zone to apply my stop loss in the market. So based on the long time chart, day chart, I'll be looking out to see if I can align my Fibonacci retracement tool from the last swing higher low structure right there all the way to the current market price, to see if price can give me a pullback, maybe to this high right here or to the 0.5% Fibonacci retracement level. Alternatively, maybe price can make a pullback to the ascending trend line we had on this price and then give us a rejection upward. So if we can have a pullback down, it's possible we might have a pullback to the key level structure of the 1.36694, which could act as support, or maybe to the dynamic trend line we had right from July, which was being tested in September. So let's see if we can have this type of a strong rally downward. Maybe we can have the same strong rally downward right there. So this is how I love to trade. For example, imagine those who long right here can see how the trend reverses. So you don't long high, you try to long low. Remember, or take note, for example, imagine those who long right here, they were being reversed. So you don't ever long high. You can see right here, those who long high, they were being reversed. So don't ever long high. Look for entry at a low structure. Look for entry at those structures. So if you are looking for entry right here now, then you are trying to long high, which has a lot of risk. So look out for a pullback. It could be a pullback with the previous low highs or higher high swing right here. Look out for a pullback. Then you look out for a technical strong signals at this level. Maybe it could act as a support level, or maybe you look out for a decent pullback, retracement, pullback down to the support structure of the 1.36694, which is a previous higher high right here, resistance, and then it could act as a support right there. Or maybe you look out for a pullback with this higher high swing right there for a support structure right there. So this is how I'm going to be looking out to approach the USD Canada. Never will I ever look for a long entry at a resistance structure. I will never do this right there. I will never do this right there. So this is my view on USD Canada. Let's check. Someone said buy Canada. Well, good luck for you. So someone said check Euro USD. Okay, Euro USD. Euro USD, this is an example of what I stated, not buying into high, not buying into resistance. A lot of traders in my Telegram group today, they bought into resistance on Euro USD. And when I said don't buy on USD Canada high, I have my reasons for saying don't long on USD at high at resistance. For example, let's imagine those who long Euro USD today at resistance structure. See what eventually happened to them. See what happened. I saw this trade right here. A lot of traders were saying buy, 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 buy. I said, well, if you want to buy, as I always say, good luck to you. I'm not the king of the market and I'm not the master of the market. The market can decide to move whichever way it wants. Mine is just analyze and find out probability. So I work based on probabilities. The more probabilities I can have, then I will make my decision. If my probability is supporting a long position, then I'll be looking out for long entry. If the probabilities is supporting short position, then I'll be looking out for short position. So at this level right here, those who long at this resistance on Euro USD, see what happened to them today. I have a lot of traders who were weeping in my Telegram group today, who cried a lot. They cried bitterly how they lost funds on Euro USD, how they lost a lot of money on Euro USD because they tried to long at a resistance structure. So never long at resistance structure. Never do that. So if you do that right there, you can see what happens. So currently what we have on Euro USD, you could be looking out for another maybe entry at the support of this rising channel on the 4-hour chart. But based on what I can see right there, I am still not yet comfortable to look out for a long entry. And one of the reasons I don't want to trade for the remaining month of October was based on what I have on my track record. So for you guys who are new to my live stream, so over the past month, this was what I was able to do in the month of October. I was able to make almost closing to 20%. I was able to make almost 20% on my track record. But currently right now, I have some losing trades, so the track record have to put down to 16.5%. So this is what I have right here. So 16.5% in the month of October is a good track record. So this is why I stated I am not going to trade any trade again in the month of October. So currently right now, we are in the month of November, and I'm looking out for trade opportunity. But I'm going to make my list of assets next this evening, or this, yes, we are still in the evening, right? By 12 we moved to another day. So I'm gonna make my watch list tomorrow, and I'm gonna share with guys in my Telegram group. So for now, I still have no reason to long or to short on Euro USD. Based on what I can see, I still want a market that has opened up. So what we see have right here on the Euro USD is market is showing us a potential buy setup, but there are a lot of sell pressure in this market. The momentum is yet to change to the bull side. The bears and the bulls are still in a tug of war. There is still a tug of war going between the bulls and the bears. And the reason why I told you the tug of in my previous live stream, I showed you guys how you guys can combine candlestick to form or a bars on the price chart. I mean how you guys can combine several candlestick to form a single candlestick on the price chart. So the formations of all the candlestick we have in this downtrend right here, all the formations of what we have in this downtrend right here, if you navigate to the higher time frame, you're going to see it's going to be a doji candlestick. So first, let's see, this was on October 2nd. This was the first candlestick that formed on October 2nd. That was on Monday. And this was the last candlestick in the month of October 31st. So like I stated right here now, the market right here is in a state of indecision. So one of the candlestick that shows state of indecision in the market is a doji candlestick. So let's switch to the monthly chart of Euro USD and see what the month of October actually carved. What the month of October is showing us. Is it a doji candlestick or which part? So let's go to the monthly chart. As you can see right here now, the monthly chart of Euro USD gave us a doji candlestick. You can see this is the doji candlestick, which means on the lower time frame, market is in a ranging medium. Market is in a state of indecision. So whenever you have a market in a state of indecision, the best thing to do is just stay off that market. Stay off that market. If you try to long short, you have your fingers burnt. You burn your finger, you blow your account. So based on what we have right now, you can see. So what I'm looking out for right now is I'm looking out for technical signal bar to confirm this doji bar at the support level as a concrete floor for the bulls to come in. So based on what we have, or as a doji candlestick in the month of October at a powerful key level support, whenever there's a doji candlestick at a powerful key level structure, it is signal that the other side has a higher potential to come in to exercise their interest. Since we have the month of September as a bearish candlestick and the month of October is a doji candlestick, then technically there is a higher chances the bulls are gonna come in to exercise their position right here. So this could be the month of November could result into a bullish candlestick. So what I'm actually looking out for in the month of November is to see how I can figure out strong buy technical reasons, technical buy, technical confidence factors for me to go long on Euro USD. So based on the month of November, I'll be looking at to see how price will react to key level structures, market structures, momentum, liquidity on the day chart, on the weekly chart, on the forward chart, so that I can flow along to the direction of the higher time frame. So currently right now, the Euro USD is on my watch list, and I haven't yet seen any signal to execute any trade right here. But based on what I can see on the higher time frame, there's a lot of more strong technical reason that the bulls have higher tendency to set in to exercise their interest in the month of November. Happy new month to you guys. So someone said this is Euro USD. Someone said GBP USD. GBP USD, let's check what we have on GBP USD. The analysis on GBP USD is also the same thing, almost the same thing with your Euro USD. GBP USD as well is in a choppy market. You can see just like a descending trend line right here in a downtrend. So let's see if price is going to break this steady trend line for a more downtrend, or maybe price is going to break out. So the market is in a state of indecision on the lower time frame. That is the day chart, the forward chart. Let's check the monthly chart. On the monthly chart, we also have a doji candlestick on the monthly chart. So this market was in a state of indecision for the past month of October. So let's see this month of November, maybe the bulls are going to come in to put price to the upside. So that's what I have. Someone said, Aremu, nice analysis. Thank you so much, Aremu. Someone said, how about Australian dollar paired against the New Zealand? Guys, Australian dollar paired against the New Zealand, it's a very risky currency pairs. As a beginner, I will advise you to stay off those currency pairs, because if you try to trade Australian dollar paired against the New Zealand, Euro paired against the British pound sterling, you are putting yourself in a more difficult market. Trading itself is not an easy job. Now you want to make things to be more difficult for yourself. So if you are trying to trade Australian dollar paired against the New Zealand, you are trying to make trading to be more difficult for you, because Australian dollar and New Zealand have the same market correlation. Euro and GBP have the same market correlation. So if you check my currency pairs right here, I don't have the Australian dollar paired against the New Zealand. I don't have it right here. I don't trade it. Okay, I have it right here. I don't trade this asset right here, because most of the time this asset will be going in a choppy market. It's going to be trading against one another. It bounces up, it bounces down. So most of this asset is really good for rangy band strategy. So if you are a beginner trader and you are trading Australian dollar paired against the New Zealand, you're actually making things difficult for you. Why not focus your trade on Australian dollar paired against the USD, New Zealand paired against the USD? Why not do that? Why trade Australian dollar paired against the New Zealand? So let's check it out. Based on the weekly chart, we have a choppy market. Nothing realistic right there. Based on the day chart, this is what you have. The market keeps on bouncing up and down. This type of market do not obey market structure. They don't obey technicalities. They don't obey chart patterns. They don't obey key level structure, whatever strategy. They don't obey it because they have the same market correlation. So the market bounces against one another. So for you to make profit in this kind of currency pairs, AUD, New Zealand, just stay away from this asset, please. Okay. What is the name of that trader? So is it RC? Please just stay away from AUD paired against New Zealand if you want the best result for your trading career. Okay, stay away from those assets, right? Stay away from those assets. So someone said, and then stay away from Euro paired against GBP. Stay away from Euro paired against GBP. You can see this asset keeps on bouncing up and down against one another. If you trade them, you will cry, you will weep, you will blow your account. You will blow your account. This is an experience, right? You will blow your account, right? So someone said, which pair is good for a new person? So one of the currency pairs which is good for new traders is trade liquid markets. These are major currency pairs. You trade GBP USD, Euro USD, or if you want to trade during the Asian section. So if you're in the London section, if you are in Ghana, Nigeria, maybe you're in Cameroon, you are in West Africa, and then you go to work in the morning and you come back in the evening and you want to trade, most of the currency pairs you can trade when you get home, maybe when you want to trade during the night, 10 p.m. or to 1 a.m. in the night, 2 a.m., 3 a.m. is the Asian currency pairs, such as the Australian dollar paired against the New Zealand, Australian dollar paired against the USD, New Zealand paired against the USD. You can go to the Australian dollar paired against the yen, but most of the currency pairs that move during the Asian section is Australian dollar paired against Japanese yen. These currency pairs tend to move during the Asian section because the Australian dollar and the JPY, they are in the same time zone. That is the Asian time zone, so they tend to move at that period. And the New Zealand paired against the JPY, they tend to move during that medium. So if you are a new trader, if you want to trade during the Asian section, trade AUD paired against the Japanese yen, New Zealand paired against the Japanese yen, AUD paired against the USD, New Zealand paired against the USD. If you want to trade during the London section, in the morning, your time London section, trade GBP USD, trade Euro USD, trade the gold market, trade New Zealand paired against the USD, Australian dollar paired against the USD, USD Canada. But mostly, if you want to trade during the London section, trade GBP USD, Euro USD, and during the US section, trade USD Canada. These currency pairs tend to move. USD Canada, USD Yen, GBP USD, Euro USD, they tend to move. So in summary, as a beginner in the market, just stick to these currency pairs right here. GBP USD, Euro USD, AUD USD, New Zealand USD, USD Canada, USD Yen, and USD Switch. So these are the assets you should trade, right? Based on my level of experience, I trade a lot of currency pairs. I trade exotic currency pairs as well. I trade the USD Yuan, that is the USD paired against the Chinese currency Yuan. I trade it. I love that currency pairs. Whenever the USD Yuan is trending, I make a lot of money on this currency pairs. I so much like the currency. And when it is not moving, it's going to be static. But once it starts moving, it's just going in one direction. So the USD Yuan, I can't advise everyone to go into it, but if you really know what you are doing, it's a good market. You can make money. You can see right now it has been going through ranging medium right from August, but at this medium right there, which was on the May of 2023, I made a lot of money during this breakout of the March up. I made a lot of money right here. So USD Singaporean dollar as well, it's a ranging band market, so I love its ranging band strategy. You know, once it's in a ranging medium, it bounces up, goes up. And once it's in a shopping market, just leave it alone. And the USD Singaporean dollar, I trade this asset as well. I also like the ranging band or strategy. You can see right now, it has broken down now from a rising channel. It's going to be coming down all the way down to the major dynamic support structure, which acts at the right from the August of 2022 all the way to January 2023. All the way to July 2023, is going to be targeting this structure once again. So these are the exotic currency pairs I trade. Exotic currency pairs: USD Yuan, USD Singaporean dollar, and USD South African rand. So these are the three exotic currency pairs I trade. And then I have my yen currency pairs. Whenever I want to trade during the Asian section, I go to the yen currency pairs. As well, I have the index market. So as a beginner, no, just stick to major currency pairs. USD, major currency paired against the USD. So those are the currency pairs you're going to trade as a beginner. As your trading experience improves, then you can start adding more currency pairs, right? Yeah, someone said, is there any other pair you should stay away? Let me list them on the chart so that you guys can see. Let me list it right there so that you can stay away from them. My advice is just stay away from them if you don't want to blow your account. If you don't want to cry in the market, just stay away from those currency pairs. Stay away from them. Stay away from them. If you don't want to cry, stay away from them. You see these two currency pairs? These two currency, okay, let me make it to be bold. These currency pairs, I beg you, please. These two currency pairs, you see it, just stay away from them. In fact, I'll paint it as red. I'll paint them as red. Stay away from these two currency pairs. Stay away from them. If you really want to be profitable, stay away from these two currency pairs. If you don't want to blow your account, right? Stay away from them. Someone said, please share gold. I already gave analysis on gold, so you can go right on my YouTube channel to watch the gold. Someone says USD yuan. Yes, best way trading. I trade USD yuan. I trade USD yuan, and I like that currency pairs. I trade USD yuan. I trade it a lot. It's a nice currency pairs. I understand that currency pairs very well. I understand it. So I made a lot of money during the March breakout. And let's go back to the assets right here. I traded this currency pair during the yuan breakout. Actually, there was a news release on yuan currency pairs that was today. You can see the manufacturing PMI. It was 49.5, so lesser than the forecast. So we also have fundamental factors in the Chinese economy. So this is the manufacturing PMI. The news was negative. I was actually monitoring the currency pair today to see what is gonna really happen, but nothing really happened right here. So the market didn't move right here. You can see that. So I traded this currency pairs right from March 2023, and I made a lot of money. I rode this trend right from the breakout entry right here all the way up to the resistance structure. I actually traded it to the resistance structure right here at the price of the 7.25 before I went out. So it was a nice profit trade for me. So I love that trade. I've been trading it for a while right now, and I understand that that asset. So this is the USD yuan. Someone say what time frame is good for newbie. So a lot of questions is being asked in the reference of what time frame is good for newbie. Based on my trading experience, if you want to make money and you want to relieve your stress from frustration and emotions in trading, the best thing to do is go into swing trading. Swing trade, that is the best thing. So when you swing trade, you give yourself enough time to rest, to think, and you free yourself from emotions of trading, the stress. So the best time to trade as a beginner is stick to the day chart and the weekly chart. If you can do that, you make money. But most traders believe that the more they trade every day, the more profit you make. No, the more you trade doesn't justify the more profit you make. The more you trade means the more you expose yourself to risk. You expose yourself to risk. The lesser you trade, the lesser you risk you expose yourself to, right? So, and the better decision making the better you'll be able to make informed decisions in the market. So as a beginner in the market, stick to weekly chart, day chart, and 4-hour chart. Don't go below 4-hour chart. You can see on my price chart right here. Let me guys show you my real price chart. Let me show you guys my real price chart right here so that you guys can see my real price chart and see, wow. So this is this real chart. So this is my real price chart. So I have a wide screen view. If you guys have been watching my videos on my TikTok profile, you see I have 2 different monitor screens. So this is my real chart right there. This is the chart I use for trading. This is the chart right there. So as you can see on this chart right there, my chart right there states from 1 month, weekly, day, 4-hour, and 1 hour. You can't see minutes on this chart. You can't see 30 minutes, 15 minutes, 5 minutes, 1 minute. No, you don't have that. I don't see that as charts based on my trading strategy. Based on my trading strategy, I monitor from the monthly, weekly, 4-hour to day chart. The only situation where I use 1-hour chart is maybe whenever the 4-hour bar is too long. Maybe the 4-hour bar has moved too far. Then I can use the 1 hour for retracement entry. So this is my real chart. No 15 minutes, no 30 minutes. It starts from 1 hour to monthly chart. So I've been doing this for years, and I've been enjoying my trading strategy. So if you want to free yourself from stress and then you want to start real trading as a real trader, then my advice is just stick to day chart and weekly chart. At the end of the market trading activity every day by 10 p.m., maybe your time, or 11 p.m. or 9 p.m., then open your chart and then analyze the market. And then as a beginner in the market, just stick to one currency pair. It is not the number of trades that you take that makes you to be profitable, right? It's not the number of trades. Ask yourself these questions. For how long have you been trading every day? For how long have you been trading a lot of currency pairs? How long have you been executing a lot of trades in a day? With all those trades, are you profitable? Are you able to make money in the market? Are you able to withdraw? No, you can't withdraw, you can't make profits. So why not change the strategy? Why not change the tactics? If you keep following a strategy, a way, a path, and you can't see a positive change, then change the step, change the tactics, change the formula. So if you have been trading on the 1 minute, 5 minutes, 15 minutes, and 1 hour, and you are not profitable, why not try to stick to the higher time frame and test another experience? So someone said, what about traders with small capital like $50 or $10? We have, every trader has once been in this. all traders have started with small trading accounts. So if you are a trader who is trading with a $50 or $10 no account, I have advice for you. The advice I have for you is open a nano or cent trading account, because you can really not go far with $50 and $10 account. If anyone tells you you can turn $50 into $500 to $1,000, that is not trading. Trading doesn't work that way, right? That means you just want to lose your money, right? So the best thing I can do, the best advice is, if you are a trader that is an undercapitalized trader, what you need to do is open a cent or nano trading account. So I have a link on my profile. Once you click on the link on my profile, you will be redirected to a new page. Let me show you guys. So once you click on the link on my profile, if you are watching from my TikTok profile, once you click on the link on my website from my TikTok, this is a solution for those who have a small amount of money in their account and they want to start trading. So once you click on the link on my profile, you will be redirected to a new page. Let me just check this. Okay, let me correct this. Okay, so once you click on the link on my profile, this is the page you'll be directed to. So step 1, open a trading account. So once you click on this open a trading account, you'll be directed to a new page whereby you read the information about the brokerage firms I recommend. Something about me is I don't recommend services I haven't tested. I only recommend service I have tested. For example, right now I'm creating a video on the quoted trading platform for those who want to start trading binary options. So I have a live trading account on the binary options, and I am currently creating a video on how traders can trade on the binary options. So I only recommend services I have used. So I am a kind of person, I don't like to put my integrity at stake. So I don't joke with my integrity. So I always do everything to protect, because a good name is not easy to build, but it's easier to destroy. So currently right now, this is a quoted trading platform which I'm currently trading on, and then I executed a lot of trades. So soon, in the next few days, the video should be out. So I traded on the quoted trading platform. I have experienced the trading platform and I saw it was nice. I was able to fund and to withdraw. So I'm going to make my review right there. So this is a live trading account, as you can see right there. This is a live trading account which I have $55,000 and $580. That is $55,000 and $580 on my live account. So this is an account I'll be trading. So this is the profit I've made so far. This is the number of trade I executed. You can see I executed a lot of trade on the 20th of October. I was able to make a lot of $1,000 and I make losing $3,000. No. So this is the live account. So I trade on their platform. I was able to fund and to withdraw. So I'm going to make a review about this platform so that those who want to start trading binary options, they can use this platform. So this is the type of trader I am. I don't just make recommendations about what I don't know or what I haven't used. Right? So I've been trading on this brokerage firm right here, and this is why I make recommendations about this brokerage firm. So if you are in West Africa, in Northeast Africa, you can open an account through the green tab. If you're in South Africa, you can open an account through this blue tab. If you're in the Asian country like China, like in Turkey, like Indonesia, you can open an account through the red tab right here. So these are the platform I recommend. So once you open your account, you have an option to open a nano or cent trading account. So once you open a cent trading account, your position size will be reduced. That means instead of you taking a one standard lot, you will be reduced to nano cent account. So you have enough room, enough liquidity, margin. You have enough margin to take trades, right? But your profit will not be as higher when you trade on a standard lot trading account. I don't know if you guys are getting the point. So I will still create a video on the differences between standard, micro, nano, cent account. All right, so that is the best I can advise you. If you are an undercapitalized trader, try to open a live trading account through the link in the description of my TikTok profile. Once you click on that link, then you'll be directed to this page. So click on the step 1 to open a trading account. Once you open a trading account, then you can deposit funds, open a nano account on the brokerage firm, then you start trading on a nano or cent account. All right, so I think that will be able to solve your problem. So right now, so someone said, please, how can we read and interpret news? First, you need to understand that news is unpredictable. So if you want to become a trader in fundamental, news is unpredictable. Just like an example of what I show you today, I was monitoring the manufacturing PMI for the Chinese currency pair, but the market didn't respond to the news the same way, but other currency pairs responded to the news, like the USD employment cost index, Euro USD, all of them failed against the USD. So first thing you have to know about news is unpredictable. News are just like catalysts. They tend to change the state of rest of market actions or price actions. They cause sudden movement in the market, increase market volatility, right? So first thing, how you can interpret news, let's go to the forex factory. You see right here on the forex factory, if you want to interpret news, I believe you know forex factory. So if you don't know forex factory, you can just Google it. Due to the terms and conditions on TikTok, I can't make mention of links right there, but you can just Google the keyword forex factory. Google will direct you to the link. So once you get to the website, just click on calendar. Once you click on calendar right here, you will be given the page where you can see news, and then you need to set your news you need to make filter to set the news you want to see, because we have major news impact, minor news impact, and the news which has no effect in the market. So the major ones are the red ones, while the minor ones are the ones painted in the orange color. So this is how you interpret news. There are some 3 factors you have to look out for under the news section. We have the previous, forecast, and the actual. But all these factors right here are not guaranteed. For example, when the previous is green, it means the past result was positive. The forecast means projection of investors or market sentiments or people in the financial sector. That is the projection, that is the prediction, the assumption. While actual is the result that comes out of that on that news day. The result that comes out. This news could be released from the bank, from the economical or financial sector of a country, right? So this is the actual. So whenever the actual is greater than the previous or the forecast, fundamentally price can have a positive reaction. When the news is red, that means it's negative. That means market has tendency to have a negative reaction. So for example, if you are trading Euro USD, okay, for example, let's go to the AUD right here. You can see on the, I don't know if you guys can see the screen properly. Right here we have the Australian dollar paid against the retail sales, and the previous was 0.3%, the forecast was 0.3%. That means projection was 3%. The previous result was 0.3. So traders also investors the market, the economical sectors projected 0.3%, but later on the actual result came out to be 0.9, which means 0.9 is higher than 0.3 and 0.5 or 0.3, which is the previous, and the 0.3, which was the forecast. So this means there is a surprise in the market, and it's a positive surprise. So whenever we have a positive surprise in the market, technically price should react. That means that currency pairs will be stronger. So now let's check what happened on Monday on Australian dollar currency pairs. So on Monday, let's look for Australian dollar currency pairs. So on Monday, this is what we have on Monday. You can see that on Monday what happened. The Australian dollar currency pairs spiked up. It moved up in a bullish direction because the news was positive. Now let's check another currency pairs. And first, let's check the New Zealand USD, because Australian dollar and New Zealand USD have the same market economical correlation. You can see on Monday as well, New Zealand USD also went up in the same direction. And this is why I stated avoid trading Australian dollar paired against the New Zealand. If you do that, you have your fingers burnt, right? Now let's check the Australian dollar paired against the JPY. You can see Australian dollar paired against the JPY on Monday, it didn't react, right? But it reacted today, which is it reacted yesterday. The day yesterday, 31st is already gone in the market, even though we're seeing on 31st of August, but it's already gone in the market. It's now yesterday in the market. So this is 31st. It reacted today. Likewise, let's check other currency pairs paired against the Australian dollar. GBP AUD, it didn't react. So this is why I stated on Australian dollar paired against the Canadian dollar, it reacted. So news is unpredictable. Sometimes it could react, sometimes it might not react, like sometimes a surprise could make things to react. Like what we have today right now, the JPY outlook report, the policy interest rate. So one of the fundamental factors I always pay attention to is the interest rate, because this is a very powerful fundamental factor you have to pay attention to. Like the interest rate today now, most of you guys want to trade that is the currency paired against the JPY because it's going up. But most of you guys don't know why the JPY currency pairs are going up. This is why the currency pairs against the JPY were going up today. You can see the interest rate, there was no change in the interest rate. Whenever there's an higher interest rate, it means it is favorable for investors, because when investors bring their money to that particular country, they tend to earn more on their money. When they lend their money in that country, they tend to have a higher return on their capital. It is favorable for the lenders, but not favorable for the borrowers. That is a function of the interest rate. So when there is an interest rate, it means that that currency pairs is stronger. It has more returning power. So that means any currency paired against that currency pair have to fall. But since there is no change in the interest rate on the yen currency pairs, it is the same minus 0.1. The previous was minus 0.1. The forecast was minus 0.1, and the actual was minus 0.1. So it was negative, no change. So the market reacted to this, and then you can see all the currency pairs against the JPY were just going up, As you can see right now, GBP spiked up. So for those of you who want to buy GBP, want to buy Euro Yen, most of you don't know why the currency was going bullish. These currency pairs were reacting to the fundamental factors that happened today, because the yen currency pairs interest rate, there was no surprise. So all currency pairs paired against the yen were just going up in a strong bullish aggressive rally. So if you are trying to trade this buy setup or long setup, it means you are trying to trade the news impact. You are trying to trade the news impact based as well on Australian dollar paired against the JPY. But the reason why I prefer to trade Australian dollar paired against the JPY is the fundamental is supporting the technicality, because under technical condition, whenever you have a symmetrical sharp pattern, it has two scenarios. Price could break to the upside or to the downside. But based on what we have on the Australian dollar paired against the JPY, price has a more technical reason to break to the upside. Why? Because this trend is in a bullish rally. Right from the swing low on the April of 2020, price had been on a strong major bull trend. A major bull, what is a major trend? A major trend is a market fluctuation which has existed between the 12-month calendar period. So when a market exists or has transformed more than 12-month period calendar, then we call it a 12-month, or we call it a major trend. So the major trend right here is bullish, and the symmetrical sharp pattern is forming at an extreme of a bull trend. So, and the technicalities right there is supporting a bull trend, and the symmetrical sharp pattern is supporting a bull trend and an uptrend. Likewise, the fundamental is also supporting the technicality. So this is why I would have preferred to trade the AUD paired against the JPY. So if I'm going to be looking out for trade paired against the Japanese yen, I'll be looking out for trade on the Australian dollar paired against the JPY. So this is why most of the currency pairs against the JPY were just going up, and a lot of traders were just jumping in because they actually don't know why it was going up. The reason why these currency pairs were going up was because of the fundamental factors we have on the JPY, and that was the interest rate, because there was no surprise. The interest rate was negative. So it means the Japanese economy are encouraging more borrowing, so that people can come and borrow to run their businesses, and they pay no interest at all on the capital the bank is going to lend to them. So this is not going to be enticing or encouraging for international investors to bring their money to that economy, because there isn't much. In fact, there's nothing for them to earn when they lend their money to that country, right? So in this kind of a low interest rate is favorable for the borrowers but not favorable for the lenders. So this is all about economics, right? So that is what we have on the forex factory. There's a lot of fundamental factors right here. We have the GDP, we have the CPI, we have the retail sales, we have a lot of ADP, non-farm payroll. We have the FOMC meeting, federal fund rate. So I always pay attention. And today, which is on the 1st of November 2023, we have US interest rates coming out, just like the previous was 5.5 and the forecast was 5.5. So right here, the interest rate in US is high as 5.5. This means they are encouraging investors to bring in their money to come and invest in that country, right? So as an investor, when you invest your money in the economy, you tend to earn high interest rate, which is not favorable for the borrowers in that economy. So if you borrow money from the bank as a business owner, you want to run business, it means you have to pay high interest rate on the loan, right? Which is not favorable for you as a borrower, but it's favorable for the lender, because as a lender, you tend to have more or high interest on the capital you lend to the economy, right? So this is what we have right here. Someone said, how did you enter or spot an entry? There are a lot of factors I combine. First, stop the analysis. I make entry in direction of the higher time frame. Like I said I'll be looking out to long on AUD paired against the JPY. Why do I want to long on AUD paired against the JPY? First, the weekly chart is bullish and the monthly chart is bullish. And what I can see on the day chart is a pattern of a breakout. Even though the weekly chart is a resistance structure, but I can see a continuation pattern. This is a continuation pattern, symmetrical chart pattern. It's a continuation pattern. So this is why I'm looking out for potential long entry for a continuation pattern. But what I can see right here now is I'm currently monitoring this asset to see the best zone I can make an entry right here. So we have a lot of things to talk about, traders. Someone say, boss, daily. Yeah, you can keep trading on your intraday chart. So you can do that. It's not compulsory. Just try to know yourself, study yourself. So if you can't trade on the daily, then keep trading on the lower time frame. So you can do that for like years. By the time you do that for like 4 or 5 years, if you are profitable, good. And if you are not profitable, then you switch your strategy. So it's part of the learning process, right? Part of the learning process. What time frame is good for them? Please teach us how to read and interpret the news. I can use 100 lots on the one. Want to use 100 lots on the $10 account, sir? How is that? That is not possible. Someone said, how about Canada switch? Canada switch as well. I watched this currency pair today and I was really so flabbergasted what I saw right there. It was some support. So based on what is it called, Canada switch, I can see a potential buy setup on Canada switch because price is already at an extreme low. Price is already at an extreme low, so there's a tendency for price to make a bull reversal to the upside. So Canada switch, there's a potential bull move. Someone said AUD yen. I already gave analysis on AUD yen. Someone said good. You can watch the copy of this live stream on my YouTube channel. I have a copy right there, so I will send the link in my Telegram group. So if you're not yet in my Telegram group, click the link I'm about to join my Telegram group. Is there any other pair we should stay away? Yes, I mentioned is Euro GBP and AUD pairs again in New Zealand. So guys, this is all I want to share with you in this live stream. Thank you guys for the attendance into the live stream. Thank you everyone. So if you have a question before we end the live stream, you guys can ask me. And if you're a new trader, if you don't have a live trading account, or if you are struggling or a victim of fraudulent brokerage firm, I have a link in my bio. Click on that link to register on a legitimate, reliable, transparent brokerage firm. So let's quickly go through the NASDAQ 100 before we end this live stream. NASDAQ 100, let's see what we have on NASDAQ 100, right? So someone asked NASDAQ 100, that is Visuals. I think Visuals is a trader on NASDAQ. He is the one who usually asks about NASDAQ. And NASDAQ is as well good. So let's check what we have on the monthly chart and see what we have on the monthly chart. So based on NASDAQ, okay, this is S&P 500. I think I have NASDAQ. I want to use the NASDAQ right here. So NASDAQ right here, this is what I have on the price chart right there. And I give analysis on this asset. No, I think that was last week price broke out. So based on NASDAQ, I don't know if you guys remember the analysis I gave on this asset on the last analysis I gave on NASDAQ. I said I'm looking out for a pullback. If we can see a pullback, right? If you can see a pullback to this level right there, that would be nice. So just for you guys listening attentively, if you are a trader on the Nasdaq, I can see a potential trade setup on Nasdaq. If you can see a pullback to the price of the that is the 14,547 on Nasdaq, if you can see a pullback, then monitor our price will react to this support structure right there. So consider traders. So if you are a trader on the Nasdaq, you can look out for trade opportunity when price get to the key level structure of the 14,554, because price broke out at the support structure right here. You can see it. Price broke out right here. So look out for a pullback and see how price react. If you're in my Telegram group, I will share with you how price react or my final decision on this asset. Okay, if you're in my Telegram group, I will share with you my final decision on Nasdaq 100. So visuals, I can see a potential opportunity to short if price can make a retest and there is strong technicality for a bearish entry at the key level structure of the 14,554. Right? So guys, before you go, like one or two of my videos. Use that to appreciate my effort or my talking for the past hours. Use that to appreciate my effort. Like one or two of my videos. Please don't like more than 2 videos to prevent spamming. All right, just 1 or 2 videos. Like, and you can put a comment down, whatever you want to put down right there. It's okay. And make sure it's a video you haven't liked before, because if you like on a video you have liked in the past, the like will be removed. All right, so make sure you only like videos you haven't liked. So you can scroll down my videos and like any of my videos and just put a comment down. Right, so thank you guys. I appreciate you guys for your attendance. Thank you guys for the love, for the share, for the comments. Thank you guys. I really appreciate you guys. I never knew this would go so far. My intention when I started this TikTok profile was just to make a I cannot just say make a record of my personal trading activity, just to reflect on my trading activities in the market, you know. But along the way, things start going bigger, and I hope more things become more bigger than this. So I promise you guys I'll always be right here to share my trading journey and experiences with you guys. So I might not be that trader who come online to flaunt money or material things of life. You know, to me, that is not the best way I can motivate you guys. So the best way I can motivate you guys is to show you how you guys can trade and then be sincere with you guys. And I encourage you guys that you guys can make it in trading. So you can make it in trading. All you just need is to have a good trade or have a trading strategy and be disciplined. Have a set of rules, put down your trading rules and then follow your rules. And when you have a losing trade, know that having a losing trade is inevitable. I as well, I have losing trade. I can't deny that fact, and no trader can ever deny that fact. Any trader who tells you he or she doesn't have a losing trade is a lie. It's a big lie. So what you just need to know is know how to lose right. Know how to lose right. When I say know how to lose right, is when you lose, know why you are losing. Maybe you are wrong, or maybe the market tells you are wrong. Sometimes you will be right, but the market will tell you that no, I'm not going your direction this way. So you have to learn to treat your losing trade as a cost of running your businesses, as a cost of, that is the expenditures in businesses, and then your profit as your revenue. So once you have that mindset, you always have peace and comfort and happiness, even though when you have a losing trade. So most time when I have losing trade, I'm happy. I don't have reason to feel bad, because I know losing is inevitable in trading. But what sets you as a professional, as a profitable trader, is your number, or your profit ratio should be higher than your losing trade. I do not mean when you have 10 winning trade, then you should have like a 5 losing trade. Of course, you can have 10 losing trade and have 5 winning trade, and that profit of 5 winning trade is higher than the losses that you have on your 10 losing trade. For example, let's say for instance you have a good risk management, and then on each trade you risk X, and your X is like maybe $100 on each trade, and then you have 10 trade, which is equal to $1,000. That means you have a $1,000 losing trade, right? Which is, okay, you lost. And then once you have a winning trade, which is X, and then on each of your winning trade you have like $300 for just 5 trade, and you have it for 5 trade. So once you multiply that gives you 1,500 trade. So 1,500 trade. So if you're able to do 1,500 trade minus your loss, that means you have a profit of 500. So that is how you can become a profitable trader. So it's all about managing your risk, and then managing your money, and then think properly, find out probabilities. Trading is about probabilities. The more probabilities you can have, then that means you tend to stack the odds in your favor. So You can see this is an account I've shown you guys. So far in the month of October, I was able to make 16.5%, even though I made above this almost close to 20%. The market, I still have to fight the market, and the market still take its own out of the profit. So I can see that as cost of running the business. But at the end of my trading activities in October, I was able to pull up 16.5% profit on my account. So imagine if you are trading like a $100,000 trading account and you are able to pull up 16.5% on your account. That is almost $16,000. So if you have $16,000 in a month, no, that is good. And if you are trading a $1 million trading account and you are able to make 16.5%, no, that is $160,000. So that is good. And if you have a small account like a $1,000 and you're able to make 16.5%, you know, that is a good money for you. So that is it, guys. So you can do it. All you just need to do is believe in yourself, be sincere with yourself, put down your trading record, not only your winning record. Have a record of your winning and losing trade, and then reflect on your winning and losing trade, maybe every weekend, no, maybe every end of the month, or maybe end of the daily activities. Once you do this, you will see you improve in your trading career. And then take note, you have to give yourself patience, because most times people tend to put themselves under stress. No, you have to give yourself patience, because this is a field, a profession that can give you financial freedom. So if it was easy, everyone would have quit their job and start trading. So it is not easy, and anything that's going to be very great is not going to be very easy. So what's going to make you to defeat or to be successful is not giving up. So if you don't give up and you keep on still trying, you will definitely make it. So you only fail when you give up. For as long as you don't fail, for as long as you don't give up, you haven't failed, right? And then failure, there's nothing bad to fail, because failure is part of success. Without failure, there cannot be a success, right, guys? So thank you, guys. Keep grinding, keep trying, don't give up, and then keep managing your risk. Trade with stop loss, right? Manage your risk, manage your money, and then make a realistic take profit target. Don't set a take profit target that is unrealistic in the market. Okay, manage your risk, and then I'm always here for you guys. If you need any support, in the market, you can always chat me up in my Telegram group. I'm right there 24/7. Even though I'm not right here during the Asian section, I have someone who will respond to your requests. All right, so guys, join me in the Telegram group. Let's trade together, let's make money. So after this video, maybe tomorrow, I'm gonna release a video I am trying to shoot on the Cotex trading platform. So this is an account I traded on the Cotex trading platform. I'm not a fan of showing my trading account or flaunting money, but there's no way I can just pull this account off right there. This is where this platform is built. But as you can see right here now, so for those who have been making requests for me to make a review of binary options platform, they can actually trade. So if you want to trade on the binary options, I recommend Cotex. This is an account I have right here. I deposited $50,000 right here, and I'm able to make some profit. Actually, I have a previous deposit which I was able to withdraw. So I deposited the fresh account right there, $50,000, and I've traded this account not quite long, and I'm able to make like something like $5,000 plus right there. So these are I'm going to share with you the strategy on the YouTube channel. So once the video is ready, I'll pull it up on YouTube so that you guys can watch the video and then see how you can join and then start trading and start making money, right? So thank you, guys. So looking forward to seeing you in the next live stream tutorial. Thank you, and then remember to visit my website for more trading educational content and subscribe to my YouTube channel. Thank you. Have a wonderful night. Is it sleep? Are you going to sleep? Okay, some part of the world are not actually going to sleep. So enjoy your day. If you are going to bed, I wish you a safe night sleep, right? Thank you, guys. Good night. Peace.